And it's great to have you join us in another edition of our weekend business program, Capital Market Live on Channels Television. I'm Ladi Williams, and as usual, let's see how your money performed in the week, starting with major markets around the world. See, major equity markets around the globe ended the week mostly lower after U.S. Federal Reserve's chairman, Jerome Powell, warned that he expects the Fed to continue raising interest rates in a way that will cause some pain to the world's biggest economy. Results, U.S. stocks and Wall Street fell deeply in the red on Friday, with the Dow Jones Industrial Average down 1,008.38 points, or 3.03%. To the S&P 500 fell about 3.37%, while the Nasdaq Composite slid 3.94%. It's a similar picture in Europe, as UK's FTSE 100 dropped 1.88%. Germany's DAX dipped by 0.70%, while France's CAC index closed the day with a 1.68% decline. Meanwhile, it's a slightly different picture for markets across Asia-Pacific. In Japan, the Nikkei 225 ended Friday earlier in the day about 0.57%. Hong Kong's Hang Seng Index gained by 1.01%, while the Shanghai Composite was down 0.31% on Friday. And back home at the local equities market, we saw investor sentiments for the week ended quite green for the week compared to the week before that. We had big moves from stocks like Airtel. Let's bring in Onome Ovorole, lead analyst at Money Africa, joining us via Zoom. Great to have you on the program, Onome.
Good evening, Ladi. How are you doing?
Good evening. I'm doing good, Onome. And looking at the NGX, their performance for the week, it did end, cumulatively in the green for the week. But how did you see performance in the market?
I think the performance was quite good. I mean, obviously, at least for the week, the index was up 0.63%. It's good to see that the decline we've been seeing so far has kind of paused. But when you look at it, you have barely 4 trading days left the month of August. So except you see a strong last-minute performance, we're very likely to close August negative. But net, I think this week has been a fairly good week in terms of price movement and all that.
And for you, what stocks stood out?
I mean, obviously, kept eyes on Zenith and Stanbic IBTC. The 2022 numbers came out. I had MTM on my radar because they've commenced trial coverage, or let's say they've commenced letter operations of 5G services in the country, and on a technical basis, I think those are the numbers that or the results of firms have looked at: Zenith, GT, MTN, Okomu, and Presco. I think Okomu was, I remember correctly, was marked down this week. So, I mean, on a technical basis, I've kept my eyes on those stocks, and then obviously Zenith and Stanbic because of the H1 numbers.
Right, and looking at the market as it is right now, what do you think, would be driving sentiment more? Do you think traders should be looking more at technical analysis or fundamentals at this time?
I think a bit of both, really. I think a bit of both, because on a technical basis, and some of those stocks are trading at attractive support levels. So obviously, people will be looking, would some of those stocks break below the support level? And in that case, it becomes an interesting play. On a fundamental basis, I think so far so good. The same group of companies that have delivered good performance year in, year out continue to do so. Obviously, the environment is a bit more challenging in terms of cost pressures, in terms of inflationary pressures which are hitting the average consumer. But I think all in all, so far so good for firms that have been able to either manage costs effectively or have been able to take price increases. I think so far, those companies will continue to do well in this environment.
Yeah, quite interesting. We've seen a couple of those dividends announcements in the market. And do you think they've been, driving investor sentiment at all? Hello, Nome.
I don't think so. I think with the state of the markets, I wasn't. Most investors weren't expecting that because we didn't see any fundamental change in the dividends that were declared so far. So when you look at the Zenith Bank declaring 30 kobo, the same thing as last year in terms of interim dividend. Yes, we saw Stanbic IBTC increase their dividends. So I guess that was the outlier. But beyond that, really, dividends have largely been in play or have largely been about the same from last year. So for the banking space, I don't expect any significant surprises, And remember that we are also approaching, as elections approach, you'll find that alongside the higher interest returns on investments like T-bills and other fixed income investments, as those rates begin to increase, you would find some investors either taking position there or cutting back on their holdings on the NGX to sit down and observe things as they go.
I don't know, ma'am. Saw some investors, who've been sitting on the sideline, watching the market, trying to find, that entry. Do you think now is a good time to maybe start dollar cost averaging, or is it better to just stay out if you're out?
So the thing is, from a price basis, a lot of those stocks, are trading, at fairly decent multiples. So if you look at Zenith, that's what you moving between 2021, same thing with GT and all that. They're not overly expensive at that point. But the question is, could things could the macros in the economy push things to go below that point? So I think for me personally, I'm of the opinion that except there's a compelling play, the best thing is probably to sit down and just sit on the fence till maybe early next year as we approach the elections, or just after the elections, depending on how they shape out. But beyond that, the prices aren't expensive. It's just that they can easily go lower if we have disappointing news coming.
And obviously, most investors now are looking for, how to beat inflation. That's the major elephant in the room at this time. How do you think investors back here can, somehow, beat inflation?
To be candid, it's a difficult thing to do because if you look at long run average inflation in Nigeria, it's around 12%. And if you're using the more recent figures, and you're pushing what 18, 19%, so I think the best they could do is to, at the very most, focus on preserving the value of your capital because beating inflation is a bit tough over here. And also, another thing they could do is to look at, okay, what kind of cash returns can I earn? So even though my capital itself is probably barely beating inflation, from a cash basis, the returns I'm earning, can I beat inflation? So if my cash returns are pushing, say, I think if you can do double-digit returns in terms of cash in Nigeria at the moment, I think we're in a fair place. Yeah.
All right, let's look at the sectoral performance now for the week. We saw a couple of sectors there doing fairly well, but going forward, we've seen the banking counter. That one has been, hammered a lot in a couple of weeks now. What do you think is the best sector to actually target at this time if you're looking to make profit?
I think banks come in first because obviously, come rain, come sunshine. the banks do well in Nigeria, right? And I don't see that changing anytime soon. But beyond that, bits and pieces of the big stocks across all the other sectors. So if you look at the brewery sector, for instance, likes of Guinness and Nigerian breweries have done quite well. If you look at the agri sector, the last 2, 3 years, the likes of Okumu and Cresco have done quite well, and I don't see that changing. You know, then you have the telco space with the like of MTN and Airtel Africa. So basically, it's mostly going to be around banking, agri space, and the telco space. And I think those are where great picks lie at the moment, for Nigerian stocks.
What about the consumer goods sector? Recently, I saw a report recently that showed the Nigerians spent over $1 billion, buying soft drinks and, alcohol, beers. And I'm wondering, looking at that consumer goods sector, do you think it can still, give some gains, going forward?
I think for me, what I'm looking out so far with that space is how well, I mean, selectively, the the top dogs in that space continue to do well. So when you look at, say, the likes of the Nestle Nigeria, maybe to a smaller extent, PZ or they will continue to do well. But how well can they pass on costs to the consumer? Because the average consumer is pressured. You have spiraling inflation. You have income that's barely moving upwards. So that's on one hand. Then they are also dealing with energy costs. Literally every company or every sector of the Nigerian economy has had to deal with your energy costs spiking. So then you can even add the third factor, which is FX. FX issues are a problem, and if you have imported goods and all that, getting FX is a challenge, really. Literally every call I've been on, those are the three um, areas of concern for many firms. So how well they'll be able to navigate that would determine if they will fit it. But I'd say maybe if I were to look at that space, the only firm I would say I'm mildly bullish on would be Nestle, because I think so far so good. They've been able to navigate the environment. But will it continue to be that way this year? I guess we'll have to see.
Right, it remains to be seen. Well, we've got a couple of dividend announcements, from most of the companies listed on the NGX. Which ones interesting to you at this time?
I think Stanbic was interesting to me because Stanbic typically pays a larger interim dividend than a smaller final. So interim dividend paid by Stanbic IBTC went up. So that was what I found interesting. Seplat too, because I think Seplat is currently the only firm in the NGX that pays a quarterly dividend. So if oil prices continue to remain sticky where they are, I think that it would at bare minimum maintain that dividend payment. Then I'd say also MTN, the interim dividends went up as well. So those three, I'd say, stood out for me.
Interesting. But Onome, I'm going to ask you one last question now. Going into September, what stock are you bullish on?
I would say still the usual suspects. The banks first, because obviously as interest rates are inching up, that's beneficial to the banks. So I'm taking the banks first. Maybe some of the agri firms, Okumu and Presco. I think they're trading at attractive levels. Results this year have been, way better than last year, which was also a good year for them. So it's between the banks, Okumu, Presco, and MTN.
All right, Onome, thank you so much. We'll keep watching out, but still stay on now. We'll go on a break. When we come back, we'll drill down on the NASD market and other matters. Do stay with us. This is Capital Market. Welcome back to watching Capital Market Live on Channels Television. Now, the activities at the unlisted securities market ended the second week of July in the green as the NASD OTC Exchange Security Index recorded a 0.19% advance. At the same time, the market capitalization went up by 100 million naira to close the week at 1 trillion naira, while the year-to-date returns increased by 2.43%. The total value of securities traded during the week decreased by 94.35% as the market recorded a total of 178.54 million naira in value against 304.04 million naira in the previous week. Well, to give some enlightenment about the unlisted securities market, let's have now Mr. Ehwarede Longe, who is the NASD MD, join us via Zoom. Great to have you on the program.
Yeah, thank you. Good evening.
Yes, I know you were supposed to be here, but because of the gridlock, you couldn't make it to the studio. But thank you so much for joining us via Zoom. So to get the conversation going, what is the difference between the NASD unlisted securities, over the counter market, which you operate, from the Nigerian Stock Exchange, since, you have some securities listed on both platforms?
So that's not correct. I mean, we don't have securities listed on both platforms. I mean, I think that's one of the things that was assured as NASD took over, started operating. But what it is really is that NASD is a dealer's market. So typically, you have dealers who discover what you might call dark horses. And those dark horses are public companies that have shareholders who want to trade their shares. But since they're not listed and haven't gone through the entire 9 years of qualification, they put up an OTC market where those shares can be traded. And that's how it often starts. But after some time, the lines get blurred, such that you're really looking for companies that have very high growth value. That's what you now find with an OTC exchange, such that those companies actually become listed, and you see that people begin to swing to look for alpha on OTC exchanges rather than on the main board.
Quite interesting. But how would you assess the OTC market so far, this year, given the recent listings on the exchange?
I think the market has done very well. We've seen that the market has developed greater breadth because of the fact that last year, when you compare it with this year, there were perhaps focused securities where trading was done, particularly the listing of the temporary listing of the NGX on the NASD. But this year, you've seen broader activity from oil and gas, financial services, consumer goods, and then yes, also a particular interest is a wealth management company that was recently listed on NASD.
Right, and
so the market has been quite positive. I think for this year we've done approximately in value 78% of what we did last year.
Quite interesting. And what would you say is the current size, of the market players, issuers, and trade?
That hasn't changed too much, but currently we have about 42 securities listed. We have 42 securities listed. We have 152 institutions that trade on our exchange. Of course, you also already mentioned that we have a capitalization of 1 trillion. It's 1 trillion that we're proud of, but we know that there is significant deepening required on our markets. We need to get more involved with the Nigerian economy, is what we say. The capital market is very broad, and that's another thing that the OTC market tries to do. It tries to involve more of the real sector into the capital market focus. So yes, our market is growing constantly, and we will see as time goes on, very interesting listings on our market that would be thought to be unusual, but would be very, very exciting.
Quite interesting. But
we could talk about that some more.
Right, but how would you describe, the participants, the investors in that market? What's the demographic like?
The demographic is fairly the same, but we're trying to change that, because um, often also an OTC market is has traditionally evolved from the tech space. You're beginning to see some of that in the Nigerian markets. Um, and we're going to see that we address more of who we call I don't know what they call them now. I think it's Gen Alpha, it used to be Gen Z.
Right.
But currently, we do have most of the people trading being the traditional traders. But as we get more stocks that appeal to the younger generation, you'd find out that that demography shifts. You see more of participation of younger people trading.
Are you looking at, getting some of these stocks, being traded on maybe apps that you can easily just, trade on your phone or any a tablet or platform?
That's a very interesting question because, I think that the future of stock exchanges is digital and everything can be done on a phone. I think you should watch the NESD space. You're going to see something really very exciting. I think what we have is that the Securities and Exchange Commission has issued the rules for listing of digital assets, digital and virtual assets. NESD is in the forefront of the development of that development, and we'll see a lot of exciting things coming up.
All right. Thank you so much, Mr. Ewaride Longe, the MD NSD OTC, and congratulations on your new appointment.
Thank you. Thank you very much.
All right. Okay, so let's drill back now to the other market there. Talking about the NGX, we still have Onome Ovorile, lead analyst at Money Africa. Thank you for staying on, Onome.
Thank you for having me, Ladi.
Yeah, so Onome, I'd just like to have your parting thoughts now. Looking, to the end of this year, what are you seeing coming for the NGX?
Okay, so let me start from the companies themselves. I think the banks will continue to do well. I think some of the consumer goods firms will continue to do well. Telcos, obviously. But broadly, as interest rates continue to inch up, I expect that you'd see more focus by investors on that. In conclusion, though, I strongly believe that we should end the year on a positive note. So that for me, how strongly positive, it's hard to say. Will it be as great as last year? I don't quite think so, but I think that we should close the year on a positive note. And within the rest of the year, opportunities will pop up for people to gradually take position into stocks that have.
All right, Onome, thank you so much. Onome Ohorile, lead analyst, Money Africa. It was great having your perspective on the show today.
Thank you for having me.
All right, so that's the show today. Thank you so much for watching. Don't forget you join us again next weekend. See how your money performs. Thank you so much. I'm Ladi Williams. Bye for now.